Today we have Daniel Kitwa, Director of Energy Access Finance at Greenmax Capital Group in Nairobi. Greenmax Capital is an advisor and fund manager investing in off-grid energy projects across Sub-Saharan Africa, notably Kenya, Uganda, the DRC, Benin, Madagascar, Nigeria, Sierra Leone, and Mali. Daniel was nominated for Charge's 2024 Rising Star in Energy Award. Now, the award recognizes the extraordinary achievements of a diverse group of young professionals aged 35 years and younger in the energy branding space. Congratulations, Daniel, and welcome to the Charge podcast.
Yeah, thank you, Natalie, for having me, and thanks for the Charge podcast team for setting this up. Yeah.
Great. So to start, could you give our listeners an overview of the current energy trends you're seeing in Sub-Saharan Africa, please?
Just for everyone's context, the move around energy access has been well over 2 decades now. So we had the first wave of decentralized utilities, mainly PEGO solar companies. And in terms of the first trend we are seeing is a lot of the first generation PEGO companies are now moving into more of the appliance market, selling of mobile phones on credit basis or sort of end user financing model. Others are also moving into selling of electric bikes and such kind of distribution models. So you have your legacy M-Coppers and the Delights of the world doing that. Another trend we're also seeing in the markets that we serve is growth of the mini-grid model, both as a rural sort of energy SME model. And so we are seeing a lot of electrification happening in refugee camps. We are seeing also the growth of metro grids, particularly in countries like the DRC. The other trend we are seeing, particularly also in the mini-grid market, is densification projects. So a lot of, 5 or 7 years ago, we had projects that initially were built as pilots and now have, met their proof of concept. And we are seeing a lot of follow-up capital coming into those, either through results-based funding or debt or other sort of construction instruments. So we are seeing a lot of that, particularly in mature markets like Kenya and the likes. And then the other trend we are seeing in mini-grids is the growth of interconnected mini-grids, particularly in countries like Nigeria, where there's there's also an interplay with the national distributed utilities. The other trend also is around other technologies like hydropower mini-grids. Initially, that was a play for the large-scale IPP players, but now we're also seeing community-based or small-scale hydro mini-grids targeting communities, and some of the companies include the likes of Hydrobox and Virunga Power playing a role there. And then with the sort of hydro mini-grid model, we're also seeing opportunities for other use cases. So, for example, we are seeing some small hydro mini-grids, playing around with Bitcoin mining, sort of as a model to maximize or complement their revenues. And also with all these, I would say, infrastructure projects, we are seeing some of the mini-grid players tapping into, other payment or revenue models like the REX market or the carbon credit markets as well. So it's quite interesting, an interesting development over the last 2-3 years in some of the countries. I'm happy to pause there, but obviously there's quite a lot happening. Even you could go into EV, electric vehicles, a lot of innovations happening in the two-wheeler segments, and also largely around also productive use, talking about technologies like cold chain and the likes. Yeah.
For people who aren't familiar, so we're talking about, mini grid, which is sort of beyond the grid solutions especially for villages or communities as a way of connecting them to, basic access. And then also another word you used as well was productive use of power. And for some people, they also may not be familiar with productive use of power.
I can add maybe a sentence there. So basically, when we talk about productive use of energy, there are quite many definitions out there, but the general consensus is energy beyond lighting. So that sort of energy for lighting is basically the basic form of energy access. And when you talk about productive use, is either energy being used to increase income, lower costs, or increase productivity. So, for example, if power an appliance that is helping maybe save on fuel costs, like for example, electric cook stoves as a supplement for your traditional biomass, then you're probably saving spending on such fuel. If you're looking at things like switching from diesel alternatives to clean alternatives, there's also an income play there also. So I think that's sort of the basic consensus on that.
So Greenmax Capital, we've already described you guys as an advisor and fund managers. So are you able to share the companies that Greenmax Capital are currently investing in, and then some insights about the opportunities that you're currently seeing?
The whole mantra around Greenmax, we are quite adaptive in terms of the financial instruments we provide. So we are quite flexible in providing both blended and commercial instruments that are needed quite in these quite challenging markets. So, for example, I would actually, there are a lot of investing examples that I could use, but just to mention a few that have stood out in the last couple of years, we started an initiative called Green for Access Fast Loss Facility, which is basically providing guarantee instruments to microfinance banks and tier 1 and tier 2 banks in Africa to enable them to invest in off-grid energy portfolios. And with that instrument, we have been able to unlock some partnerships between local microfinance and, for example, productive use appliance companies. So recently, we were able to support an MFI called Fortune Credit to partner with a women-owned e-mobility company called Iwaka in Kenya to actually distribute their products to the BOP segment, or the bottom of the pyramid segment. The other space, obviously, I've alluded in terms of my initial discussion around the mini grid space with our advisory role at CEI Africa. We've been quite privileged to work with some innovative developers. So right now we are working with two developers, one in Kenya called Renovia, that is actually electrifying refugee settlements, one of the largest settlements in Africa called Kalio Bay, and that they are currently working on expanding the existing site to a 2.4 megawatt project. And we are looking to connect more than 14,000 connections. So with that, we've been able to provide a blend of instruments, results-based financing, technical assistance, and debt to meet those targets. And with that, we're also seeing a growth in productivity, particularly in that refugee segment that is quite, in most cases, left out. And then we are working with Nuru, a developer in DRC, also building a very large metro grid, 3.7 megawatts in a region called Goma, that previously has been conflict prone, and we are seeing emerging use cases. We are seeing increased anchor loads emerging, both on the public amenity sides, be it schools, health clinics, but also around households and also small-scale SME businesses coming in. So with those two projects, I think we are not only proving that mini grids are good in terms of pilot scale or kind of small community projects, but also they are the utilities of the future and actually can complement to a large scale or large extent what the traditional public utilities have been doing.
That's really interesting. And how are these companies, you name dropped a few companies, how are they engaging with their customers? Are they doing anything unique or innovative in terms of customer outreach and involvement?
Yeah, so I guess that's a very interesting question, because a lot of these markets, there's a need to be quite engaged, and sort of it's more of a contact sport, if I might use that kind of analogy. So what we're seeing is a lot of them have embedded sort of a long-term approach to their project development. We see many of them take even 2 to 3 years just to being embedded in the communities, doing their load assessments, doing their community engagements, building relationships with the regulators and the government agencies, just to optimize their success rate. We are seeing also a lot of them, sort of hybrids of working with local experience and local talent to be it on the technical or the business side to actually improve their success rate of their projects. So that's one of the things. And probably if I could mention from an investor, what we typically look for, we explore companies that have track record. So for example, we look at their prior performance in terms of their portfolios, in terms of their customer service, in terms of their construction risks and how they've maneuvered around that, around procurement and other issues, even around compliance. And then particularly on the regulatory side, particularly for sectors that are quite heavily regulated, like mini-grid licensing and permits, approach to concessions, tariff structures. Those are quite important metrics for us to consider. And then the other sort of a viewpoint to look at is obviously the ability to attract partners. So there are companies that have been quite able to bring on board other investors. So they're able to bring a whole pool of investors, because there's a lot of co-financing and co-investing that is required in some of these projects.
So you just mentioned co-investment, which is working with other finance partners, whether they be international or local, regional, like yourselves. And I just wondered, the reputation of Africa, the reputation of energy access, like looking at that at a macro level, what do you say to investors? Encourage them to work with you?
I think the approach and the sort of the perception varies. Obviously, in terms of the whole issue of risk, there are quite the elements around risk in Africa that are more of perceptions, and some that are actually real. So one way to look at it is the type of product we bring on board. So, for example, when we talk to banks, they are quite open to work with products that have a risk mitigation. We typically take the origination angle or the origination role. So, for example, we would actually be the ones to source the actual transactions, and in most cases, actually design or build or actually curate the transaction, and then sort of handholds the respective co-investors.
And then, are there any emerging trends you're noticing in how companies are engaging with their customers or local communities?
Yeah, so I think one emerging trend we are seeing is the idea around shared benefits. So, for example, we are seeing some of the PEGO companies. I could make a mention of Solar Sisters and others, promoting social safeguards within their carbon projects, introducing core benefits to the community, either from the revenues they are making The other aspect of shared benefits we are seeing is, looking at the resources of the community and almost taking a circular approach to the projects. So, for example, you have, some developers, for example, the likes of Mandulis Energy in Uganda, where they are building solar and biomass hybrid mini grids. And in most cases, they use the community's feedstock of the agricultural waste output as a sort of input into the energy production process, and they actually become the off-taker of that produce. So they sort of turned waste into value, and that creates sort of a very embedded and long-term approach to working with the communities. And the other approach we're seeing is also partnerships in cases where consumers are quite organized. So, for example, with the e-mobility companies, we know a lot of the motorbike riders, or as we call them here, border borders. They have organized themselves into small cooperatives or small groups, and those cooperatives become sort of a touch point when a microfinance or an end user financier is doing credit assessment, because you can leverage the books or the data or the information held at the cooperative level to actually assess the risk of financing an individual bike rider.
I think your case study, your Ugandan case study, is really great. I mean, it directly benefits the community. And I think this example in this case study can be replicated.
Yeah, I agree.
And going forward, what should the energy ecosystem be working on to make sustainable energy access a reality?
Because we're operating in very low margin businesses in some cases, so there's need to be quite efficient. So I believe technology can play a huge and important role. I think also, I think most of the conversations, even some of the discussions I've had here is we can tend to be quite technical, but I think there are also non-technical focus areas as an ecosystem we can do. For example, the work that, Charge is doing in terms of bringing the marketing or the brand building aspect is quite important, because at the end of the day, we should be telling our stories much better, and no one else can tell our stories other than ourselves. So we need to get better at that as an ecosystem.
Yeah, and thank you so much for that. No one can tell our stories like we can. That's lovely. Yeah, because we've been there, we've done that. So we are the people to tell that story and to give that experience. Yeah, that's great.
Yeah.
Out of curiosity, are there any good storytellers, any companies that are good at storytelling that you've seen?
Yeah, I could think of a few.
William Brent. Yes, we know William Brent well.
Yeah, he's quite good at stuff like that. He brings also the human and marketing and storytelling piece to some of the technical topics.
Husk Power won Challenge Brand of the Year with Charge in 2023. So that's good to know that someone that you recommend, really is the real deal. So if anyone else wants to, hears this, would like to nominate themselves or their company for Charge Awards, then we are going to be open, and definitely recommend that you showcase your stories, your brand, and the work that you're doing. Thank you so much, Daniel. Thank you for today. It's very insightful.
Thank you.